Nancy Tengler, who I think has some key thoughts on really whether there's still fuel to the fire of the tech rally. Is there when you're getting these sorts of inflation prints?
Oh, absolutely. I mean, the market loves it. But let's also not forget that these stocks have been delivering all the way through the rate hike regime from the Fed. And then again, with inflation higher, we have argued that inflation comes down symmetrically, but not necessarily linearly. So I think that this is a good number, not a huge surprise, and we'll see what happens in December. But, you know, Caroline, I wrote a piece that this market is analogous to 1990, where we had inflation above 3% for the entire decade, yields between 5 and 8% on average for the entire decade, a war, a recession, productivity like we have now. And then in addition to that, the indices were up, 400%, over 400% for the Dow and S&P, and over 800% for the NASDAQ.
But Nancy, to be clear, in your mind, have we hit peak rate?
Ed, I think so, but that doesn't mean we're not going to continue to see volatility. I think, we've never had this much supply come on so quickly. And so I think we'll continue to get, the market will react to bits of news. We'll see what the PPI says. But in general, I think we're kind of there.
Going back to that 90s reminiscing and perhaps echo that we currently see in the current market, Nancy, is it that, therefore, we can continue to run on the same sort of 7 names that the market has loved thus far? Or do you need to get broader, wider in where you anticipate some of the gains are going to come from?
I do think you need to get wider, Caroline. I mean, I think we need industrials to work again, maybe energy. I think financials have to do some of the heavy lifting. But in general, if you look at the Magnificent Seven, this is not my work. It's Jason Trennert's at Strategas, and he separated it out as its own sector. Margins are growing faster, earnings and revenue growth growing faster than rest of market and rest of technology. And so I think you have to give them the tip of the hat and say, I may not want to own all of them, but I want to own some of them, and I need to have them in my portfolio because the tailwinds, the secular tailwinds are at their back.
Speaking of tailwinds, Nancy, you heard me talk about Nvidia at the top of the program, up for a 10th straight day, matching its record run that it set in 2016. It is the best performing stock on both the S&P 500 and NASDAQ 100. What do you make of that run? What is your attitude towards it?
I wished I owned it. It was never cheap enough for us. It was for about 20 minutes on one day, and then we just missed it. I think importantly, what you know from last quarter's earnings is that the multiple actually went down despite the stock running up. So I think this is one of those stocks like Amazon a decade ago, like Walmart 2 or 3 decades ago, that you just step aside and let it run, and hopefully you own it. We own Broadcom, so we've had some of the benefits of AI chip and cloud computing. We own a lot of the Magnificent Seven. We just don't own that name. I think if you own it, you keep it and let it run. And if you don't own it, you wait on all of these stocks for pullbacks.
And what would be the spark of a pullback, do you think, Nancy?
Well, I think we got one in October, and September. I think if we, and that was based on, the Fed saying they were going to be higher for longer. But I would argue in the medium term that doesn't matter because we've had much higher rates and strong investment performance, particularly from technology. And then I think if we get conflicting data and we just continue to hear the Fed speak, the market is still reacting to that on a daily basis. But I would point out that the reason I think you want to own these stocks for the long term is that in periods of tight labor markets, and there have historically been 3 or 4, but one again that's mostly analogous, which was around the 80s, 90s, these stocks, the spend in technology has gone up, and then these stocks have outperformed. So I don't think the trade's over. Someday it will be, but I think for now you do want to wait for volatility, of maybe a weak earnings report, another Fed speak period where we get, some conflicting data like we did from Powell meeting. He was a little more dovish. Last speech, he was less so, and the market took it to heart. Those are your times. That's the time when you step in.
Stepping into, well, an Nvidia, as we're just hearing from Ed, is up more than 200%. Microsoft's just hugely outperformed. So has the likes of even Meta in this year of efficiency, Nancy. Can you talk about if there's any consistency on what you're seeing in some of the companies that you like? Is there anything that makes them stand out uniquely that therefore wants you make to add? Because I know you take individual names and bring them to us.
Yeah, so I'm happy to do that. So I think, I don't know that you would necessarily recall this, but we were adding to the group last fall. There was not a good piece of news to be found, but they were slowly and quietly delivering strong earnings growth. So the names that are in our 12 Best Ideas portfolio are Microsoft, strong management team, Azure's taking share. They're going to monetize AI. We're seeing them cram it into every nook and cranny of offices and every other aspect of their business. The deal went through with Activision. They launched 365 Copilot. I think you're going to see this company continue to take share and dominate. And it's been it's an obvious name, but I don't think you want to walk away from it at these levels. Adobe is the unsung hero of AI. It's also a good management team. That is our theme. We pay very close attention to management. I think that's a name you want to buy on pullbacks. It's a little rich right now. ServiceNow, I've talked about before on your program. Bill McDermott delivered a beat, and raise last quarter. And he's a great salesman, and he knows how to run the business. They are taking IT spend away from other providers because they're in the sweet spot of navigating cloud computing and generative AI computing. And then Amazon, I think Tony Jassy got Tim cooked when he took over. I bought Apple after Tim Cook was heralded as no Steve Jobs, and that was in about 2012 to 2013. We were adding to our Amazon last year. I think you can still buy it here. He has figured it out. He's cut costs, and we're paying very close attention to the healthcare portion of their business. But the cloud business is still growing remarkably. I think that's a name you just buy and you put it away.
Nancy, you didn't mention Mark Zuckerberg. You mentioned everyone else. Meta is a magnificent 7 stock. Do you hold Zuckerberg in the same leadership bracket as those?
No. So we owned it many years ago. We described ourselves as reluctant shareholders. We sold it at levels at about current levels and a little bit higher. We missed getting back in. But as with Google, though we do own some of Google, not in our 12 Best Ideas portfolios as the names I just discussed were, but we don't like the 2 share class. It's really an advertising business. I think the Meta misstep and the spending at both companies needs to be reined in. With Google, we're a little more optimistic because we like Ruth Porat in the new role as president. But I know you can still make money on it. I just think there's better places and more interesting places to be. And I don't like. I haven't really been thrilled with the leadership, even though the stock price has delivered and they cut costs. That's great. You can only do that for so long.